The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
Well, a REIT, of all things, flashing a signal on the growth and income radar. Is it a good thing or not? Our growth and income strategist, Todd Bunton, is going to fill us in, let us know that part of the deal. This REIT is in the healthcare area, Omega Healthcare Investors.
That's right. So they have over 900 properties, primarily in the skilled nursing facility space, located in 41 states, and they're in the United Kingdom a little bit. Just completed an acquisition of Aviv REIT, makes them the dominant player in the skilled nursing facility space.
I read that.
Yeah, and at least among publicly traded REITs.
Yep.
So they're one of the big guys. Now, their portfolio consists of primarily long-term leases to third-party operators. So they don't operate the skilled nursing facilities themselves. That's all done by third parties. And a lot of them are triple net leases, meaning the tenants pay all of the property taxes, all of the maintenance.
Yeah. How could you lose?
Right. It's a pretty good deal. Now, the risk with these is that the operators themselves get reimbursed by Medicare, and there's been some issues there, but there's nothing in the pipeline that suggests that that the federal government is not going to pay out to these tenants or anything, so or pay out to the operators. So I think Omega Healthcare is pretty solid there. A lot of those clouds have dissipated. So
do you know also if they have any exposure to Medicaid programs in some of the individual states, which may be having some budget issues and not paying their bills?
Right. I mean, that's been a concern as well. But with the somewhat improved economy and state budgets starting to improve, a lot of that's dissipated. So those clouds have kind of cleared up over this stock. And the company, if you look, they actually have been delivering very solid results. The company delivered a nice solid beat and raise in early August, prompted analysts to revise their estimate significantly higher. And if you take a look at the price consensus chart for Omega Health, you can see a nice steady uptick in consensus estimates really since 2011. The company has a history of beating and raising, beating and raising, beating and raising, and that continued last quarter. Sent it to a Zacks Rank of 2, which is a buy rating. And if you look, based on consensus estimates, analysts are expecting about 11% funds from operation growth this year, 6% growth next year.
Yeah,
but you can see the stock price has declined so far this year. Big reason for that, interest rate risk. So these companies, they pay a solid dividend, which I'll talk about in a second, but they also have a lot of interest expense on their income statement. So higher interest rates would mean higher interest rate expense and make their dividend less attractive. But I think that's all priced in. I mean, you can see the stock's taken a pretty big haircut despite solid operating results.
And how could you say a 6.7% dividend is less attractive?
Right. That's
less attractive than what?
Yeah, I mean, the 10-year right now is less than 2.2%.
Yeah. And
even if the Fed increases, it's going to be about a 25 basis point move on the short end of the yield curve. Who knows where long-term rates will move, but you're not going to get that kind of yield on any fixed income investment without taking substantial risk. So that's very attractive, and the company has a history of increasing that dividend. If you look back over the last 10 years, they've increased their dividend at a 12% compound annual growth rate. So very solid.
Since 2005.
That's right, yeah. So very solid history, even throughout the financial crisis.
Right.
Like I said, they get a steady stream of income from those leases as long as the federal government is paying those operators.
Right.
Then these guys are going to be solid. And valuation looks pretty attractive. They trade about 11 times forward funds from operation. That's actually a discount to its 10-year historical multiple. And I put up a few other healthcare REITs here that operate in the skilled nursing facility space. You can see a lot of big yields there, a lot of relatively cheap valuation multiples, but none of them have that good blend of positive earnings momentum, solid income, all at a reasonable price that Omega Healthcare investors offer. So I think there could be solid total return potential in this space over the next 6 to 12 months.
Okay. Do you own it?
I do not.
All right. Well, we have more information on stocks. There's commentary, there's stock picks and stock picking strategies that you may want to take a look at on our website, Zacks.com. Link to it all right off the homepage. And also another reminder, if you're watching our videos on YouTube's platform, you can subscribe to them there and even comment on them. With Todd, I'm Terry Ruffalo.